Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. I'm going to look through the variety of stuff that I normally look through. Dollar, yields, precious metals, and the commodities that I follow. So I'm going to dive through here, give you my financial opinion. If you guys need any help with anything commodity related, definitely subscribe to finding-value.com, the platinum membership. Use the word discount. And we did have our Sunday meeting. So that will be Saturday, 7 a.m. will be the next meeting coming up for the platinum members question and answer session. All right, so let's dive in here. Let's take a look and see what's going on. We've got DXY. DXY is the relative strength indicator of the dollar. And we've got this kind of falling wedge. We've got some good buying pressure here. We'll see if we break on higher or if we get a little bit of a pullback first before going up. But to me, it looks like the path of least resistance in the short term could be higher. Stronger dollar for a little bit of a move. Looking at the 10-year yield, the 10-year yield is moving higher here. We'll see how much juice this thing's got. We had this little falling wedge. It's not a gigantic wedge. And we've come and kind of broken to the upside of it. We're popping higher today. We can also see that the 30-year yield's popping higher today as well. Up 2.9 for 10-year, 2.6 for the 30-year. Bond prices down a little bit, down 1.68%. We kind of had a little topping pattern go here where it just lost the juice, and it's been heading a little bit lower. So that's bond prices, yields higher. The TYX to TNX, to me, this looks like it could even potentially go lower here. An inversion of the yield curve, perhaps, with a bearish engulfing with the ratio. What that means is that the curve is inverting more, put it that way. And again, we could be kind of at this lower bound area, right at this support level that we're going to bounce on for a while. So this could just go back and forth, up and down, right at this support-ish level. We have gone below it back in the early 90s. We did, early to mid 90s. We went below it in 2000. And we're back in 06 as well. So we kind of did one gigantic loop all the way back from 2018. The CRB index, slightly lower today. Still looks good though. We've broken out of this pattern to the upside, done kind of this retest, and we'll see where we go here. Sometimes they can go sideways for a while. But sideways to higher is what I would be looking for. The CRB to S&P 500, that definitely looks like the commodities could outperform the S&P 500 to the upside. We had a falling wedge, broken that, and we've been grinding higher. Gold, so higher yields, slightly lower dollar. Gold doesn't like those higher yields, I don't think. And we've got this wedge here. I do have, maybe perhaps if you draw this across, kind of an inverted head and shoulder possibility. And we're kind of just grinding upwards. Now, I could do this. I mean, I could just do something like that where perhaps it looks something like this, moving sideways. And as we get more data, we can draw this however we'd like. And we need to see where this thing ends up. Because as the short-term trades, it will define whatever pattern it's going to be. And that's also why the short term is difficult to trade, because the patterns are being created. So it's usually best to take a little bit longer viewpoint and see what the big picture view could be creating. So this could be a shoulder, head, shoulder, and an inverted head and shoulders. And let me grab that guy down real quick. So this could be something that looks like this. Now, I'm not grabbing too many points here. So this thing can be very flexible here. And it could be another thing that you could do is you could take the top portion here and just basically put that down like that if it's a channel. If it's a channel. But something on the lines of that, we've got silver heading a little bit lower. It does look like it's got a little bit more oomph behind it, down 1%. we've got some pretty strong selling pressure here with the hammer candlestick there. Buyers and sellers are dueling it out back and forth. Platinum on the short term, it is definitely looking like it wants to sell down a little bit. Looks like we could head a little bit lower. That's great if you want to be buying more physical platinum. But we'll see where this thing falls down. We've been basically grinding sideways here for a little while. Maybe we've got another pullback here in consolidation. XAU to gold ratio, that is also falling. We came up to this somewhat of a resistance line. I'm going to put it kind of more in this general vicinity up here, the resistance line, as you look where these have closed and traded. But we came up to resistance. We're pulling back what this means is that the gold and silver miners are underperforming gold itself. We still haven't broken out of the big long-term downtrend line. So that means that GDX sold off more than gold. You can see the sell-off here. We are continuing lower. Also, SILJ, obviously getting a lot more selling pressure here. There's your support level, somewhere in that range there. But it is heading lower definitely today. And it's got some momentum behind it. Crude oil, one of few that are up today. You could say that this is a downtrend line. It's got one hit, couple of hits through here. Kind of the retest. We'll see if the buyers want to push it higher or not. But that's crude oil there. We very well could go lower with the overall markets. The overall markets are looking kind of crappy, and it very well could drag crude oil and some other things with it. But right now, it's the financials versus the physical. Is the physical markets tight? Where with China reopening, with Russia perhaps taking some barrels off the market, with Western energy service companies leaving there. SPR releases will be ending at some point here in the future. I don't know the exact timing. I think it's December something. But that should be ending at some point. And perhaps we'll see a move higher due to physical tightness. Natural gas getting walloped today, down 11.65%. This is definitely earning its most volatile commodity name. So we are just moving back and forth all over the place. But overall, it's working off that downside momentum from this big selling pressure move. And I think we're going to do some of this as we consolidate. XOP, yeah, you know me, down 2.3%. That is, let's see what the chart looks like there. It's down a little bit today, even though oil was up. Natural gas obviously got a shellacking. Could this fall further? It could. Yes, it could. We've got kind of big long-term view. We've got a real strong support level at about 105, 106, somewhere in that range there. That's this, 105, 106, somewhere in that range there is a nice strong support level. We're kind of bouncing all over the place. I do think we could head back down there if we'll call it the buyers and sellers want to push it. A lot of the times, if you were to kind of cut this is kind of your down. This is your downtrend. This is kind of your downtrend area, and this is where it reversed. So the way that this goes up, it could mimic very closely to the way that this guy goes up. So you're going to get stopping points where a lot of buyers and sellers exchanged shares. So they exchanged a lot of shares through here. You're going to get a lot of movement up and down in that same general vicinity. You could say that it's forming an inverted shoulder, head, shoulder. And it's going to take a little bit of time for this to develop, that inverted head and shoulders. So the pattern on the big long-term, big picture view looks really good, but we could see still some selling pressure in the short term. OIH, energy service companies, also getting a little bit of selling pressure, down about 1%. Not a huge down day. It does look like it's working its way sideways. It's grinding, and with oil going up, natural gas going down, and then the exploration production companies going down, energy service wanted to add into it. The Sprott Physical Uranium Trust, it is getting more selling pressure. So big selling pressure, no rebound. Big selling pressure, no rebound. Big selling pressure. I do think it could head lower in the short term. I do not see buying pressure. I do not see buyers stepping in. So therefore, we would take the side that this could sell off more in the short term. And remember, the way that this thing falls, let me see here. Let's see how this thing went up. So we're coming up here. We had this guy get hit there. This could come back even, to 11-ish, 10-ish dollars. Okay, let me get something that I can actually draw. It could come back to a level that's somewhere at that $10, $11 range where there's a lot of buying pressure and support. It's possible to pull back down here if it wants to go back down there. So that's the Sprott Physical Uranium Trust URNM also getting more selling pressure. It does look like to me that we are going to head lower. A lot more selling pressure here, bearish engulfing. We still have the selling pressure remaining, these big selling pressure down days all throughout. And it looks like it's starting to dominate on the right-hand side here. So we could see a flush to the downside in uranium if it wants to sell off. The overall markets are selling off, and I know uranium does track the overall markets, it seems like, more than some of the other markets that we follow in commodities, but yeah, it's definitely selling off and we could head lower. TAN also selling off 1.3%. Still looks good from this perspective. Left side equals the right side. Getting that pause right where it used to pause. We've got COPX down 0.87%. It does look like we could come back maybe to this support level at $33 or so in the short term. And remember, the way these things go up is usually the way they go down. This general vicinity, $34-ish here. We've got lots of support in that area. It's probably going to head back somewhere in this little area back there. Lithium, LIT, we're getting selling pressure here. This is showing up today down 1.4%. I do think that this could still pull back to even this support level down here, down at $38-40. That is a possibility for lithium. And if it does that, that's going to be one heck of a buying opportunity. That is for sure. REMX also selling off with the rest, down 2.69%. It is getting right below its support level. We'll see if this holds or if we're going to pull back even further with the overall markets. The overall markets were down. The S&P 500 was down 0.9%. We're getting these little wicks at the bottom, though. So people are coming in later in the day and buying it up a little bit. But undeniably, this does look like it wants to go lower, momentum-wise. NASDAQ is down 1.5%. That's also lower, bouncing off that resistance line through here. We did a little fakey out here and then jetted lower in the short term. I still think this has momentum behind it. It still could go lower, especially if interest rates are going up like they are. EEM moving sideways, still looks good. We've broken the downtrend line, and it's just hanging out, moving sideways. XHB does not like those higher interest rates. It is pulling on back a little bit today, down almost 2%. Is this a double bottom, or are we going to get all the way back down to this level of a full retest of $48? It's very well possible we can get all the way back down to $50 or $48 down there and do a retest of this breakout. Moo down 2.7%. This still looks like it could go lower in the short term. We're still getting selling pressure there. This guy, I think it can do a retest as well, all the way back down at $70, which is a possibility here. And we're getting a lot of selling pressure. You can see these big down candlesticks on the monthlies. Definitely think it could go lower in that short term. Copper's right at that resistance level. I drew this in a little while back. We've hit our head on it a couple times. We're heading back a teeny bit today. It's basically flat. I would say copper looks strong today, given all the other sectors and how they look. Lumber's still heading lower. This does not look good for lumber, but we are back to this bigger long-term support level. We'll see if that thing holds. If we blow through this and go down, then I do think that we could potentially see problems, recession, problems, the housing market. If the housing market goes down, we will have a recession. That is usually what leads a recession, is housing starts. And we'll take a look at housing starts when the new data comes out, which should be any time now. And I'll take a look at it here, see if it's up. Iron ore moving sideways, still looks good. Descending wedge to the upside. Aluminum's actually looking strong, up 0.23%. The breakout and then the retest. We've got Baltic Dry Index still looking good for a potential move higher, up 2%. I think that's 1 day delayed. Newcastle coal still looking good. It is basically right against that resistance. If I were to kind of zoom out and throw in kind of this resistance area, that's where we're hitting our head on it. We're right at that resistance level. And then we have Ethereum, which does look like it's consolidating in here and kind of squeezing up some. So we'll see which way this thing wants to break. Bitcoin is doing the same thing. It's consolidating and moving sideways. And if I were to look at the housing starts, I don't know if they updated today or not. I'll take a quick look. I just got to see where I have it here. So 1 second, guys. Here they are. U.S. housing starts. I don't know if this is updated because I think last month was 1.425 million. It's still reading October, so we don't have November's numbers yet for last month. But I'll take a look and try to find that and see what's going on with it. I think it releases sometime soon. But that's what we've got for today. Lots of selling pressure, guys. Lots of selling pressure. Oil kind of being that standout. Copper doing quite well. Uranium looking a lot weaker. Definitely trading with the overall markets. The overall markets they don't look good, especially with interest rates going up. Stronger rates. Markets don't like stronger rates, especially growth companies. The S&P 500, if we get strong enough rate increases, it's not going to like it. So we could see continued weakness in the short term. And with continued weakness in the overall markets, we could see continued weakness in some of these commodity sectors. One thing that we did see is a divergence between oil price and the exploration production companies and energy service companies. Oil gone up, natural gas big time down, and some of these guys, they're 50-50 on oil, natural gas. I think we'd see that pulling on down some with the exploration production companies. So again, guys, I'm riding through this thing. I'm going to continue to watch what the housing starts do. If the housing starts dive here and we really break to the downside and start moving over the next couple of months, then yeah, I think a recession very well could come. That almost always signals a recession. There was only one time where the housing starts dove quite well to the downside and we didn't have a recession. So it's got a pretty high probability of success of predicting these things. Or at least not really predicting, but telling us a leading indicator for a potential recession. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And we'll catch you next time. This is Finding Value.